the transactions and events, in this case sales, and then controls around the account balances. When the auditor performs and tests their controls, again, they're inspecting documents and records, they're talking to management, they're observing how those controls are working, and they're reperforming those controls. That's what they do to assess control risk. And then with control, after they assess those controls, the control risk, then they test those controls. I'm going to skip through this. So the objective of testing those controls, right, and it's determining is how much reliance you can place on those controls. Because the more reliance that you can place on controls, the more you're going to rely on your tested controls, you're going to reduce your substantive testing. You're going to reduce the amount of substantive testing that you have to perform, right? Because basically what you're saying, if I can rely on controls, they operate the same way. A sales transaction has the same effect on the income statement and the balance sheet if I record one sale versus if I record 1,000 sales, right? Each time I'm going to credit sales and debit accounts receivable. When I collect on those accounts receivable, I'm going to credit accounts receivable and debit cash. It operates the same way. So let's stop here, and let's take a look at problem 560. No problem. I'm sorry? Okay, no problem. All right. Mm-hmm. Right.
I also have another question.
Mm-hmm. And test the details, right? So substantive tests, which is tested controls. Mm-hmm.
So it's three.
Right. So you have tested controls, you have substantive procedures.
The details of testing details
Right.
and the dual process.
Right. And you have tested transactions.
Okay.
Right, which is usually done. That's what's meant by dual purpose test.
Okay, great. What does that mean, accounts receivable mean?
So that means that when they're doing that, they're kind of taking money you've stolen money. So now what you're doing is to try to delay the revelation that you've stolen that money, right? Is that you're taking accounts receivable from one account, like when the cash is collected, applying it to another account, and you just keep doing that. So because what will happen is it's a timing effect, right? So you won't find it out until a customer actually, you don't apply it to an account and a customer complains.
Okay.
You know, so what you're doing is stealing from one accounts receivable to pay off another accounts receivable, and you just keep like doing that until you get, because eventually it's going to get caught, right?
Mm-hmm. All right, thank you.
You're welcome. So just so we could kind of expedite this, just tell me, for each audit test, instead of going through the type of audit test, just, I'll cover that, but I want you to tell me the assertion that's being tested. Okay? So just so we could expedite it, just focus on the assertion being tested with that particular audit test. Okay, I know you haven't gotten through all of them, but I want to get kind of reconvene here. So let's, with respect to audit tests, right, the types of tests. So you have test of controls, right, and you have substantive tests. Under substantive tests, you have three different types of tests. You have tested transactions, tested details, and analytical procedures. We call them substantive analytical procedures, right? You have three different types of tests. Normally, within an audit environment, when you're testing controls, you can also test transactions, substantive tests of transactions. And that involves the testing of items in the income statement for the most part, right? Because you're testing, transactions are recorded in the income statement, and then they impact amounts recorded in the balance sheet. So you will normally see tested controls and tested transactions being performed simultaneously. So in certain instances, testing a control also provides you evidence about that transaction. And that's what we call a dual purpose test. Okay, does that make sense? So you have tested controls and you have substantive testing. And under substantive testing, you have test of transactions, substantive test of transactions, substantive test of detailed balances, and substantive analytical procedures. Test of controls and substantive test of transactions usually occur simultaneously, right? And the reason I say usually is because if you can't rely on controls, you're not going to test controls, and what will happen is you're going to perform more tests of transactions, and you're just going to increase your sample size. You're going to increase the scope of testing that you do. But normally under situations where you can rely on internal controls, you're going to perform test of transactions and test of controls simultaneously, and most times, and there are many instances where your test and controls will also provide you evidence about the transactions. So that's what we call a dual purpose test. Make sense? Okay, so the first one, what's the assertion being tested here? You're vouching recorded sales invoices to supporting shipping documents. What are you testing? When you do this, you will know what? Right, that it occurred. You're testing occurrence, right? You're going from the shipping to, you're going from sales to shipping. So you want to make sure that what's recorded in the sales journal actually occurred. So you're testing occurrence. And we would consider this a dual purpose test because you're testing controls over to ensure that for items recorded in the sales journal, there's a corresponding shipping document. So you're testing controls over the recording of sales, but you're also gathering information about the validity of the sales, right? Of what was recorded in the sales journal. So you're getting information about that account balance, about that transaction balance. Make sense? Okay. Let's move to the next one. What would you say this is? What's your assertion here? You're looking at the recorded sales invoices for credit approval. What will you know once you perform this? This is going to tell you something about what? Credit approval tells us, why do we expect to see credit approval?
Just like you mentioned, pretty much, with the company's credit report.
Right. Bad debts, right? You want to know that you're minimizing, you want to know that the company has procedures in place to minimize uncollectible accounts, right? And that deals with what? What assertion are we? You don't know if it's accurate. David, you're going to say? Right. See, it's not accuracy because at this point you don't know. First of all, valuation is it's valuation, but allowance for doubtful accounts is a balance sheet, right? So you're looking at the valuation because if the company is not making sales to customers who are not credit worthy, it's going to manifest itself in the allowance for doubtful accounts, right? Because you're going to see that if you're not credit worthy, you're not paying. So your allowance for doubtful accounts is probably going to increase. That's a balance sheet. It's a valuation. So you're concerned about the valuation of accounts receivable at that point. And this is, you're inspecting records. You're expecting recorded sales invoices for credit approval. That's a control. Credit approval is a control, one of our control procedures, right? Remember? There it is, credit approval, right? That's a control. So that's a test of controls. So you're testing the controls designed to ensure that sales are not processed for customers who don't have proper credit approval or who aren't credit worthy. So the next one is vouching the recorded sales invoice prices to the approved price list. So you're vouching what's recorded in the sales journal, the price that's included on the sales invoice for that sale that's in the sales journal to the approved price list.
Would that be a substantive test and an accuracy?
It's the accuracy assertion.
Would it be purpose test?
Well, it's not dual at that point, because you don't know, at this point you don't know anything about the balance. It's a test of control, so you're partly right? But you don't know anything about the account balance by doing that, right? You just know that the price on the sales invoice matches the price in the price list, the approved price list. That's all you know. You don't know if they recorded the right quantity, right? That's why you don't know if the amount is accurate. Right? That's why, not accurate, that's why you don't know anything about the balance. You just know that the invoice, the amount, the price in the invoice matches the price list. That's it. That's all you know. So that's accuracy. And it's a test of controls. Does that make sense, everybody? Okay. So remember that we did this earlier when we talked about, when we talked about examining assertions. It's what will I know after I perform this audit procedure? What will it tell me? And that's how you think about what assertion you're testing, Ricardo.
So the reason why it's not substantive test is because since substantive test sort of account details, and this doesn't give us any information about it.
Right, it doesn't tell you anything about the account balance. Substantive test is going to give you some information about the account balance, right? And so this doesn't. This test by itself does not give you any information about the account balance. It just gives you information about the components or bits of information about the details of that receivable. I'm sorry, sales invoice. Okay. Let's do one more and then we'll break. So the send confirmations to all customers regarding accounts receivable. What controls are you testing? Because you're not testing a process. You, in this case, as an auditor, you're sending a confirmation to accounts to your customers.
Would that be completeness?
Its existence, right? Remember, accounts receivable, because what you're trying to, so let's back up. The assertion that you're testing, anytime you're sending a confirmation, you're testing existence. You don't know if it's complete, right? That's not going to, that'll only tell you completeness about that particular accounts receivable, but it doesn't tell you anything about the completeness of accounts receivable in general, right? So it's not complete. When you send a confirmation, you're testing existence. You're trying to determine, does this accounts receivable exist as of 12/31, right? That's all that tells you. Now, with respect to the type of test, you're testing an account balance. It's giving you information about the account balance, right? By confirming by confirming accounts receivable, you're gathering information about the appropriateness of the accounts receivable balance. You're gathering evidence about the accounts receivable balance. So it's a substantive test of details, or it's a substantive test, and specifically it's a substantive test of account balances or details. Okay, so we're going to finish up this